Warm welcome to the Risk Reversal Podcast. You can hear the excitement in my voice because for the first time since December 5th of last year, I'm joined by Executive Chairman and Co-Founder of MicroStrategy, now Strategy, Michael Saylor. Michael, welcome back.
Thank you, Guy. Great to be back.
It is great to have you back. And obviously a lot's changed since December, all to your benefit, by the way. I did a quick back of the envelope math, and I believe of the almost now 20 million Bitcoin that have been mined, Strategy now owns a little over 3% of them. I think if not memory serves me, but I think you right now are up to 601,550 Bitcoin at an average price of basically $71,270. So at $119,000, $120,000, congratulations, because I think everything you dreamed of 4 or so years ago is starting to come to fruition. So let's start there.
Thank you. Okay, where do you want to start?
So let's talk about the vision you had. Here we are, July, 15th as we're taping this. Did things, this is sort of an open-ended question, but I think things are going probably better than you could have imagined, is my guess, if we're really thinking about this.
The milestones I've been looking for, right, were first embrace of the SEC, and we got that with the ETF approvals in January of 24. And then normalization of the accounting. We got that with fair value accounting, which kicked in just this year. That was a 4-year project or a 4-year effort. The third we're looking for is normalization and bank support of Bitcoin. Yesterday, we got a joint memo from the OCC, the Federal Reserve, and I think the FDIC that reaffirmed that it's okay for banks to custody crypto assets. That's a big deal. So I think the things that happened that I expected, have happened. I guess what I didn't expect, the two things that are pleasant surprises, the enthusiastic embrace of the administration, right? We got a red sweep in November, and, we went from being, sort of a anti-crypto, anti-Bitcoin to enthusiastically pro. And then I think, if you recall, probably there was one person in the previous administration, Gensler, who was aware of anything in this industry, and his opinion was grudging acceptance of Bitcoin because he couldn't stop it, and dismissiveness, toward everything else. And then not another member of the administration would have known what Bitcoin was or digital assets. They would have not had any opinion at all other than the talking points that came, from the SEC. And I think the difference we got here post-November is you've got Robert F. Kennedy, Tulsi Gabbard, Howard Lutnick, you've got Brian Kentez, you've got Paul Atkins, you've got Scott Bessent, you've got a crypto czar in David Sachs, you've got a very effective executive director of digital assets in Bo Hines, you've got an enthusiastic president who's supportive. And I think never in my wildest dreams would I have said, we're going to go from one lukewarm cabinet member to a dozen members of the administration that are Bitcoin enthusiasts. I mean, including JD Vance, right? So you've got the president, the vice president, half of the non-financial cabinet, and every financial cabinet member. And I think that a lot of guidance has come out that's all been very positive. That was helpful. And then I guess the other thing, there are two other real positives that I didn't expect. Massive enthusiasm from Wall Street. We announced our $21 billion equity plan, and people fell out of their chairs back in late October, and they thought, you're crazy. That's the largest equity plan or equity registration in the history of the capital markets. And we thought, well, maybe we can do that over 3 years. We did that over 4 months with the stock trading up. And then we reloaded. And so the enthusiastic reception of Wall Street for BTC-backed equity, more than we could have hoped. And then I think the explosion in Bitcoin treasury companies, all these there was one company when we announced in August, then a second, Square, announced in 2020. So in August of 2020, there was Strategy, and then there was Square. There were two. And last year there were 60, and this year there are 150. So there's this. And then the last kind of cherry on top is we created the market for Bitcoin-backed preferred stocks and did 3 successful IPOs this year. And those 3 preferreds are the 3 most successful preferred stocks in the century. Like in 30 years, no one's ever seen anything like it. And so, yeah, I believe Bitcoin was going to grind forward, but I think at this point we're surging.
You know, Cynthia Loomis as well. I mean, from Wyoming, I know you probably know her extraordinarily well. I mean, she's been a great advocate, a great voice for the platform as well. So you're clearly, people are lining up. And I saw recently, I think the name of the company is LQWD Technologies, which I'm sure you know a lot better than I do, but they're seemingly they're putting into position the same type of strategy, no pun intended, that you did as well. So there's seemingly now acceptance along a number of different company lines. And I'm sure that's something you thought would happen. Is that happening faster, or is that happening around the same pace that you would thought?
Yeah, that liquid announcement, I'm going to call them liquid because that's the only word I can figure out that works with that acronym. That liquid announcement this morning was compelling. You've got, I mean, the greater trend is, or the secular trend is, for the first time in 100 years, there's a capital asset other than treasury bills that you can use to capitalize a publicly traded company on. That's liquid. Bitcoin is a digital commodity, a digital scarcity, and theoretically, if you think through the implications of having a digital commodity that you capitalize a public company on, if it outperforms the S&P and is more volatile than the S&P, then you will have positively polarized the balance sheet of the company to capital, which means in theory you can raise infinite money, and the more money you raise, the wealthier everybody gets, and the faster the stock price goes up, and the more money you can raise. And that's blowing people's minds, right? Because that is such a profound concept that the more money capital I raise, the more capital I can raise. That breaks every textbook at Harvard and Stanford. And the proof is in the pudding with the success of Metaplanet, Blockchain Group, Smarter Web Company, Liquid, H100. I could go on. Massive raises at 21. Strive has just done a massive capital raise. Nakamoto, Orange BTC in Brazil, Melius, right? You've got an avalanche of these, Similar Scientific, Cooler. All of them have adopted Bitcoin treasury strategy. They've all discovered that that's good for their shareholders, and now they're starting to replicate our playbook, and it's good for us, it's good for Bitcoin, it's good for them. It's revitalizing the equity capital markets, and now we're starting to and we're revitalizing the credit markets. Like basically our equity is the highest performing equity. Our options are the most valuable, highest performing options. Our convertible bonds are the most valuable, highest performing corporate bonds, highest performing convertible bonds. And then our preferreds are the highest performing preferreds. And what's the commonality? It's Bitcoin behind all these things. And what we're doing is we're selling a volatile, high performance, our preferreds are 100x as liquid, as a typical preferred stock. Liquid, high performance, volatile security and credit
They've become their own asset class in some ways, given the liquidity you're just talking about.
The big idea is a Bitcoin treasury company can issue Bitcoin-backed equity, supporting Bitcoin-backed options, supporting Bitcoin-backed convertible instruments, supporting Bitcoin-backed credit instruments. And the market is starved for yield, starved for liquidity, starved for performance. most companies, most of the Russell 2000 are zombies. The average preferred stock trades 400,000 a day. Ours trade 40 million a day. It's like the average fixed income fund is giving you 500-600 basis points. We're giving you 900, 1,000 basis points. It's not complicated. It's everybody wants more liquidity, more yield. If you're a trader, you want more volatility. And so the conventional financial playbook is strip the volatility, which strips the liquidity, which, surrender the capital. Every Mag 7 company brags about buying the stock back and upping the dividend. And I just watched on CNBC a parade of every bank, every major bank in the country. We upped our dividend, we upped our buyback, we upped our dividend, and I'm looking on with horror because they think it's a good idea. These are the 20 best and brightest corporate financiers in the world, presumably trained at Princeton or Wharton or Stanford or Harvard. And the best practice of the CFO of every one of these great companies is to surrender the capital, buy back the stock, destroying the optionality, destroying the volatility, destroying the liquidity. And we are doing the opposite. And it's working. And there's a little virus, a fire that's spreading. And at some point, people are thinking, well, wait a minute, I'm a zombie and my life is hopeless. Or I inject Bitcoin, liquidity comes back to my stock, volatility comes back to my stock, a capital gets attracted to me. The world is not so hopeless anymore. And for the 40,000 publicly traded companies that are not NVIDIA and not JP Morgan, what hope do they have, Guy? I'm giving them hope. Bitcoin is giving them hope. And your choice is you're going to get ground into the dirt by the boot of $1 trillion company.
No, it's not. So I think most people would be surprised. I know you know this, but since 1930, so pre-World War II, post-World War I, the US dollar has lost 95% of its value. And I think to a certain extent, we've had this conversation. I think my instinct suggests that Bitcoin was born out of, fiat currency gone wild, central banks gone wild. If there is a bear case, is the bear case some sort of renewed fiscal responsibility around whatever administration that somehow magically strengthens the dollar, or is that genie completely out of the bottle?
You're correct. It was born out of frustration with fiat currency, and Satoshi made that point clear. I think that it has morphed over the last 15 years into digital capital. And now the more powerful, explosive use case is to revitalize and digitally transform the equity and the credit markets. I don't think the bear case is, in this particular case, fiscal responsibility, because the likelihood that that's going to happen is next to zero. As Len Alden says, nothing stops this train. And I don't think it's easy if you're a politician. Like, I don't know how any politician finds a way to run a surplus consistently. It hasn't been done, in the history of the world. You got 10,000 years of that not happening. So I think that chaos, disorder, inflation, uncertainty, entropy, war, famine, pestilence, competition, all of those things can be counted on. I think that the bear case for Bitcoin is explosive socialism leading to authoritarian communism or the like, right? I mean, the thing that threatens Bitcoin is if we decide to go Cuba, North Korea, and we deprive people of private property.
Right.
So it's more of a political threat when someone decides they don't like the fact that someone has any money. I don't want you to have property. I want to deprive you of your property rights. I would say on the margin, it's far more likely that a government flips communist or radical socialist than it is that Bitcoin stops working, or that people start exercising fiscal responsibility, or that entropy and chaos disappears from the world.
Which ironically, in the aftermath of what you just described, is probably another bull case for Bitcoin. But let me move on from that and say this, and this is going to be a question that you don't have to answer. You don't have to give any specifics, but have you fielded calls from governments or CFOs that would shock people? In other words, a call from the bankers or the finance minister of Japan or something saying, Michael, we need to pick your brain. And have you had conversations that, I'm not asking specifics, but would surprise the normal viewer of podcasts?
I would say that if you take the top 20 or 30 best run companies in the world, or the top 20 strongest countries in the world, the only one of those entities that's seriously interested in Bitcoin, where I have had very constructive conversations, is the United States under the Trump administration. The Trump administration and the cabinet members and Senator Lummis in the Senate and the leaders in the House, they get it, and they're thinking very hard about how do we harness the power of Bitcoin, the power of digital assets to revitalize the economy, do the right thing for the American people, right? I don't think you're going to see that from the Mag 7 or the mega banks. I don't think you're going to see it from other countries because, as we say, Bitcoin's on a need-to-know basis. They don't have a need to know. They'll be like the Charlie Mungers and the Warren Buffetts of the world. And it's not that they're not smart and they're not focused or they're not hardworking. It's just that people are steeped in their paradigm. They're distracted. They have 100 things coming at them every day. Tim Cook and, Satya Nadella, they don't think that the future of their company is based upon a monetary paradigm shift. That's not what's on their mind right now. They're focused on AI. They're focused on war. They're focused on tariffs. I mean, they're all focused upon first order things. And this is a second order thing that's almost too innovative for people to get their heads around until they face a near-death experience or a mortality event. And then they have to embrace the new idea.
When you were the founder and CEO of then MicroStrategies, I mean, respectfully, and I think you would agree with this, until your vision to transform the balance sheet, the stock was basically flatlined for a period of time. I only mention that for the context of the following statement that I'm going to make. Is it shocking to you that Vanguard, and I think everybody has heard of Vanguard. I mean, there might be similar names, but there's no better franchise, is now the largest holder of your stock?
It's ironic and amusing, but it's not surprising. It's not surprising because if you look at a chart that we put in our last Stride ATM presentation, we showed that there's $700 billion of active capital that can invest in commodities. There's 35 trillion that can invest in equities. There's 65 trillion that can invest in credit. And you know how many trillions of dollars are invested in passive index funds. So if you think about those categories, active credit, active equity, passive index funds, none of them can buy Bitcoin, but the passive index funds don't get a choice. They're going to buy the biggest market cap companies if you qualify for the index. And so Vanguard is running the biggest index fund. So it doesn't surprise me that they're the biggest index fund investor in our company. It takes a company like Strategy to issue equity. It takes a company like Strategy to issue credit. And it takes a company to be in an index. Those indexes aren't holding palladium or soybeans or natural gas or oil. They're holding companies. So we've created a bridge between the traditional capital markets and the crypto economy. And there's one last twist here. Every well-run company in this country that you talk about on CNBC is doing everything they can to decrease their equity market cap. Think about it. They're literally surrendering capital either by paying it off in a dividend or by buying their stock back. And so when you have $500 billion and you buy the stock back, you're decreasing the equity market cap. Therefore, you're decreasing your weighting in the passive indexes. My company is issuing equity, increase, our market, our enterprise value is touching on 140 billion right now, Guy. It was 1.2 billion 5 years ago. So we're 100x more. So what happens when our equity rallies? We issue more equity. So we're becoming a greater percentage of the indexes, whether it's the MSCI or the NASDAQ 100 or the total stock market. And we're just going to keep becoming a bigger fraction. And all these other companies are going to become a smaller fraction because, if you want like a athletic analogy, we're lifting with our legs and our arms, our whole body when we use our balance sheet. They're lifting with their arms, right, in a wheelchair. And it's like, okay, heroic. But, if you think about how you throw a hammer or a javelin, you don't do it from a wheelchair, right? And so that's why Vanguard is now our largest investor. And that's why the financial strategy is going to generally attract more passive capital, more equity capital. And this last issue, there's no company that's well run who's got a strategy to issue superior credit. Like they apologize for it. They're embarrassed by it, but JP Morgan is not enthusiastically issuing credit as part of the strategy of the bank. If they were, they wouldn't have 100 JPM.1997 QSIPs trading 144A over the counter, right? Nor is Apple issuing credit to grow the company. We are issuing credit like Strike, Strife, Stride. We give them happy 4-letter tickers. We put them on a shelf registration. We make them 100 times as liquid. There were 10 big preferred stocks issued in the past 4 years. 3 of the 10 were ours, but ours were the only ones that were perpetual. All of the others have call options that cripple the instrument. So conventional wisdom of the banker is put in a call so you can buy it back if the price goes up. And my view is you're crippling the security. Take the call out. So when the price goes up, you can sell it at 150 or 200 instead of at par and make sure that the guys that bought it make a fortune. And they're like, well, that's crazy. How are you going to do that? Well, the answer is I'm going to buy Bitcoin forever. And so we have a different approach to capital markets, and that approach is going to benefit us with these passive income investors.
Let me ask you this question, because I know you think through these things. The market has not only allowed you, but encouraged you to do all the things that you've just talked about for the last 20 minutes or so. Are there other, and again, forgive me for the use of the word, but are other strategies sort of in your quiver that you're just waiting for the right time to unleash, or do you sort of cross that bridge when and if?
No, the general strategy is to issue BTC-backed credit instruments. So if you think about what we can do, well, we've got a convertible preferred that's got a long duration, like it's like a 40 delta instrument that's like 16. Like if I look at my credit stack right now, Strike has got a Macaulay duration of 15.7 years. Strife has got a duration of 12 and a half years. Stride has got a duration of 10 years. So we have the option to issue converts that are, different delta, maybe instead of 40 delta, 60 or 70 delta or 20 delta. We have the option to issue shorter duration instruments instead of a 10, 15 year. We've issued the equivalent of a 20-year Treasury bond. What if we issue the equivalent of a 1 month or 3 month? Well, what if we go the short end of the yield curve? Or what if we build out the yield curve and issue 1 year, 3 year, 5 year, and 7 year instruments?
Right. That's sort of what I was getting at. Like, there's optionality there. You use the term, I'll use it again.
Yeah, I mean, a lot of optionality for different parts of the yield curve and different parts of the risk and different delta instruments. And the other optionality is to do a euro swap or yen swap. Like the average corporate issuer in Japan pays 50 basis points. 50 basis points for a corporate bond. They're yield starved. What if you offered them 500 basis points and took the currency risk? Or the investment grade market in Europe, I think it's like 220 or 300 basis points, 330, something like that. Well, what if you give them double? So I think there are interesting types of credit instruments in Europe or Japan. I think there are different credit instruments at shorter parts of the yield curve. We're not gonna, we're not gonna just launch 100 products because it would dilute the liquidity and dilute our focus. The idea is how many, if you've got the electric car, the Tesla, how many models do you need? Probably more than one, but less than 20, right? And if you've got a flying hover car that's got a nuclear fusion reactor in it, how many models do you need? You probably need the cyber truck, and you need the sports car, and then you need the family one. But so a few models, but not too many. And then our focus is, the typical corporate credit market is I sell debt 500 million or a billion at a time, and I do 20, 30, 40 tranches of it, and I keep redeeming it, and it all trades over the counter with wide bid-ask spreads, low liquidity. And I'm like, well, what if I just issued one thing and sold 50 billion of it and gave you 2 billion of liquidity? I'd rather have a model, a credit model, where I sell 10, 20, 30, 50 billion of it than have a bunch of, if you look at our credit stack, we have these convertible bonds. If you calculate the risk, some of them are 70x over collateralized, Guy. And yet they trade somewhere like in the range of distressed debt. It's like we're going out of business, but they're 20x over. They should be investment grade. And the point is, those 144A markets, the OTC markets, they don't trade true. And so the securities are undervalued. You're never going to get, that's bad for the investor. It's bad for the issuer. It doesn't make sense. So blow all that stuff away and replace it with a 4-letter ticker that trades a billion a day, and get it to trade at fair value with a fair credit spread. The investors are winning, the issuer is winning, the capital markets are winning, Bitcoin is winning. That's our strategy.
There are always concerns out there. If there's one overriding one for you, what is it?
I think the primary challenges that we face in the entire crypto industry is regulatory clarity, right, versus confusion. So when people get nervous, well, what does this mean? What does that mean? Will the Genius Act pass? Will the Clarity Act pass? Will it be good? Will it be bad? That kind of regulatory confusion and clarity is the thing that creates most volatility in the space. And so I think that'll be the near-term thing over the next 4 years. The long-term black swan is the world plunges into a, Orwellian communist, big brother situation, and you're not allowed to own anything. And so I think we got to fight for property rights and freedom and capitalism and sovereignty on the long term. In the near term, we just kind of campaign for clarity. This is what banks can custody Bitcoin. It's safe for your bank to hold Bitcoin. It's not a scam, that sort of stuff.
Well, let me say this. I'm thankful we met. I think it was in the February, right after you sort of had that weekend where you sent the board members away to sort of do their homework. We talked on I think it was the afternoon show, and we've grown our friendship since, and I'm extraordinarily thankful for that. And I'll say it, and I mean this sincerely, you're a visionary. So thank you so much for joining us, Michael.
Thanks for hosting me.